The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Wednesday edition of the Tiger Technicians Hour. It is my pleasure to be here Monday through Friday on market days. Two things are happening. There is a slow tidal change in the shorter term indexes. What does that mean? It means that when you throw a piece of driftwood into the ocean and the tide is coming in, no matter what happens, that piece of driftwood will not go out. It'll keep coming back to the shoreline, coming up to the sand, and then pulling away, and then coming back, pulling away, coming back. If the tide is going out, you throw that piece of driftwood in the water, it doesn't come in. It keeps going out. It keeps going out. Every time it comes in, it can't hold it. It keeps wanting to go further and further out. There is a shift in the 120-minute charts. There is the beginning of a shift in the daily charts, and we're going to go through them. If you're looking at if you're looking at Tiger TV, right now you will see, as I always do, I show the left side here as the daily E-minis. This is still a September E-mini. On the right is the 120-minute chart, and you see these large arch formations. Let me open it up. What's happened, 1981.50 is the left side low bar at noon on the 22nd of August. The low today is 1981.50. It is remarkable. Now, you can talk about swing highs, swing lows. You can talk about a lot of things. But what I'm going to spend a lot of time on, I'm going to do it today and I'm going to do it tomorrow, is I'm going to talk about the different techniques that I'm going to be describing and explaining in my webinar coming up on Friday. This coming Friday at 9 o'clock until 5 o'clock, an 8-hour webinar that you can, in fact, replay for 30 days. You're going to have the CD introducing the Chapman wave methodology to refer to. I'll be using that quite a bit. But I have a way of going through from the very beginning, the essence of the Chapman wave methodology, of explaining in a very thorough way how you can utilize the benefits of this particular technique to make it as simple as possible. Let me show you, talk about as simple as possible. This morning, I sent out to my subscribers, to my opening call site here at TFNN, a chart that showed in its simplest form. I call this the naked chart. In fact, we'll be spending some time on the naked chart on Friday. Why? This is it. Let me show you right here. I don't want to. I'm going to go through this there you are, as in details as needs be. Master Trader Series class with Basil Chapman. The different techniques I'm going to show are, there are just 5 basic patterns. There is the arch, there is the cup, there is the inverted, there is the V-shaped pattern, and the inverted V-shaped pattern. And there's a straight line move, depending on what time frame. Most of the time, straight line moves, even if you you dig down, you'll find that they're made up of different waves. Even if you go to the 2-minute chart, you'll find that. So, and if you're thinking Elliott wave terms, you might be looking at something that says this is definitely a wave 3, and then when you dig down, you'll find that in fact it's giving you a whole bunch of information in shorter time frames. So in my instance, what I like to do in the Chapman wave methodology is, because the simplistic way of looking at it is sometimes the easiest, and that is just to merely say, where is the lowest, most identifiable low bar? Well, at 3:40 this morning, it was at 1985.50. It goes to a peak A at 1988 at 4 o'clock, pulls back, it makes a peak because there's a lower high bar. doesn't take out the low of 1985, 50. Instead, it holds, breaks 25 cents because you move in 25-cent increments above the 1988 high of 4 o'clock. Does that, and at 5 o'clock it goes to leg B, peak B. At 5:30 goes to leg C, and then all of a sudden at 6:10 in the morning, at 1992.25, what does it do? It makes a peak D, and that is the objective. What is the objective in the Chapman wave? The prime objective is to take you from the lowest low bar to at least 4 peaks higher. You can only get a buy signal to buy mode. The mode implies there should be at least 4 peaks. You can go higher. Other things happen when you're going higher. These bars change considerably. But you see this pattern right here? Look at this. You'll begin to recognize these patterns the moment I start introducing to you the pattern of the lowercase h or the inverted y. You'll see that when there is a double top formation in my Chapman Wave CD, I call it the, this is chapter 22, drop bucket. Basically what it looks like is a straight line move to a top to a D, E, or maybe an F. Then there's a pullback that makes this cup formation, an attempt to break to a new high. Sometimes you go a little higher. But what happens is at that point, there is a failure. And if you go 1/3 to a half below the previous lip, there's a real good chance you're going to go down and test the base. If you break the base, you can go at least 1-to-1 to the downside. Those are the techniques I'll be explaining. We'll do it both in real time, and we'll do right now. We're just in a bounce mode in the 10-minute chart. First real good sign because of the candle that was formed that we're going to try to at least get from 1985.25 to maybe 1980 to 1986 and a half, maybe 1987. We'll see what happens. So let me get rid of this now. Please, there's still time to sign up. It's just so important in my work. Timing is very, very important because we look at 120-minute, we look at intraday charts, we look at the 120-minute chart. If you don't have that, you can use the 60-minute chart. But the daily, weekly, and monthly are the things that give you hat-trick buys and hat-trick bottoms. Remember, March of 2000 at the very low, we got a daily, then later on we got a weekly, and then later on we got a monthly buy signal that went to a buy mode, which took you in the monthly to at least a D. And that's the way you talk about hat-trick bottoms and hat-trick tops. So let's run the numbers right now. The E-mini is down 3.75. The 120-minute chart, let me just find that. Right here, let me get it back again. 120-minute chart just did the retest of that major low that was hit. That was on what date was that? I said it was on the 22nd of August at noon, and that started a really big move from 1981.50 all the way to 2011, round number high that was made right there at 6 o'clock. 6 o'clock in the morning on the 1st of, is that the 3rd or is that the 1st? That's the 3rd of September. Okay, so now we've gone from the 2011 back to the 1981. This is the first chance that we can have a pretty nice bounce. So let's do a couple of things. Let me just quickly see the iShares, the IEF, Barclays 7 to 10-year Treasury bond. All right, I want to look at that. We will look at it a little later on. So that's the 10-year, okay. And question, Zital in the Den says, Basil has got Dennis, I must go to Basil's webinar. Basil has got a turn nailed. Get the tools, baby. All right. Well, thank you very much. I do appreciate that. Actually, it's interesting that you say that. I just had an email from someone who said, please sign me up for Friday, September the 12th webinar from 9 to 5 p.m. I'm a member of the IBD Boston group and greatly appreciate the updates and charts you provide to us on a regular basis. I follow them and they help me greatly. I look forward to learning your methodology this Friday. Thanks so much. Best regards. You know, I love hearing that because here at TFNN, we really make a big effort in education. There's no real black box per se. I have one black box, and that is the tool that I use that I call the Chapman Wave, the Trin Gauge. that was developed by Richard Arms. He did all the work. I do nothing, but I look at certain levels, and it's got a really great average of accuracy. So here we go. Let's get out of this, and then we go through all these different charts, because this is such an important week. I would say that throughout the year, we've had some very important, I always say it's an important day, it's an important week, but normally what I'm saying is it will be a very important week if such and such level gets broken on the downside or such and such a level gets broken on the upside. In this particular instance, it's really clear. If the E-mini starts to trade anywhere in the 1978 to 1975 area, that's going to suggest strongly that we have at least a sell signal in the daily. We've already got a sell mode in the 120-minute chart, and that sell signal could quickly go to a sell mode in the daily. Then we have to deal with the weekly chart, and that takes a little while, maybe 2 weeks to take place before you formally get your directional indicators. So let's do this. We've got the Dow. The Dow right now is trading at 17,000, down 12. Holding quite nicely after yesterday's move down, but it has broken in this pattern that we're looking at. It's making more of an arch pattern because the oval has just failed. It says in the, we'll do one thing at a time. Looking at the daily, it says that a close below 16,920 to 16,880. At this point, that's about the area. A close under that level would suggest very strongly that not only do we have a sell signal, but we have a sell mode in the daily. At this particular point, the MACD is only just crossing negative. Days young, it might deflect higher. Stochastics under 80% to 73%. My on-balance volume has already been giving a signal for a few days that the position we've taken now in the Dow is probably the correct one, but we will know only later on. And this completely fails if two things happen. If the Dow in the next few days crosses 17,161, the all-time high, that's okay, because that will form the neck of this pattern, but it'll be very unusual to have broken the oval formation and gone to a lower low. It just looks very difficult to do. So I would have to say that a close in the Dow above 17,000, I'll be a little conservative here, 17,250 to 17,280, I would have to rethink it and say, hey, this has been a minor sideways consolidation. There are enough stocks now just to go a little bit higher. But if it takes the weekly chart to a new all-time high next week without yet breaking 17,161 this week, I would have to call that B. And I'd have to then say something's happening here that's very different. We can go for another 6 to 7 or even 8 weeks before we get a sell signal, which should be a major, major sell signal. But let's talk about that when we get back. Meantime, the Dow's down 6, S&P's down 3, and the comp index is up 7. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and let me just get that. Yeah. We're back, and we're looking at the TNX. So let's just finish the numbers here. Gold is down 20 cents at 12.48. Trying very hard. The GDX tried to rally this morning, then it started to slide. I'll do this at the same time as I do the DOB. In the meantime, at 90%, 90.80%, the TNX.X, that's the 10-year Treasury note interest rate, is in fact rallying. And it says, based on the technicals here, that this rally, let me just double check here, 24.44, 24.42, 24.44, yep. It's in leg C with a little doji candle, 2 gap ups in the daily chart. That's really big. And the 25.53 is a 200-period exponential moving average, which has been kind of the repellent zone every time, even though it's crossed above it and held above it, it's always come back under it. It's going to be a real test for the interest rates, for the yield coming up, and you can see this is demonstrated even better in the weekly chart as you've got lower highs and lower lows. So a close, so 25.27, 2.527%. If it had to go to 26.30, that would say that is really good action in the weekly. It's to start to improve it. The MACD will cross positive. This is a very important. This is such an important week in so many regards. I'm going to give you all the different levels. So let me just continue here. You've got the S&P. Look at this. What we're looking for in the Chapman wave. What's the core is to take you from a low bar, that's the most obvious low bar, that's the easy thing to do, and then to take you to at least peak D. At that point, other things can happen. But look at the fantastic move you got just by doing that. From 1904 in the S&P on the 7th of August to 2011.17 on the 4th of September. That's just 1 month. Good grief, that's 1 month. And that's a huge move. And now it's pulling back. And now we're looking at the price under the 9-period exponential moving average. 1994.70 is going to be the test. And we're going to be watching because the stochastics pull back. MACD's already crossed negative. It's that monthly chart's going to be so important on Friday. Oh, man, I'm really looking forward to this workshop, this all-day webinar because on the Chapman Wave, because we're looking at the close on Friday as being just giving us a wealth of information. So the dollar, I want you to look at the dollar, and let me show you something. Leg E, possibly a peak E with a long-legged doji, a fairly long-legged doji compared to the others, different to the others, a little bit more stress because it had a long legs to the upside, downside. And basically what it says is there's probably a limit. 84.52 was the high yesterday on the index. 84.73, maybe 84.88. I'm not sure about getting to the 85s just yet. That kind of looks like it could make a consolidation there, another oval formation. Or if it starts to slide and it closes strongly under the 84.04 low of yesterday, that would imply at least 2 days of downward move, and that makes 83.62, the 9-period moving average in the index, really important. Look at the EUR USD, and we'll compare that to the gold index in a moment. Look, the EUR USD, the currency pair of the dollar euro, of the euro dollar, suggests to me, when I'm looking at it, that the power to the downside, both in the weekly and the monthly, let alone the daily. Do you remember in 2008? Remember, I kept looking at the charts, and I kept saying, if you're looking at the daily charts, they're very orderly to the downside. But if you go to the weekly, but especially the monthly chart, that was in crash mode. It was amazing. And now what we're looking at is if you're looking at the euro dollar, you've got from the peak F, and remember this in the Chapman Wave, a peak F top is really serious. Not that you can't get serious moves down from a DEF, but if you recognize it an F, you've got to say, okay, this is not a guarantee, but there's a really good chance that you're looking at time and price. It doesn't have to be of the same velocity as other pullbacks, but it does say for the move on the upside, you could actually take out the left side creeping highs out very quickly, which is exactly what you've done. The target would be 1.27546, the low of July of 2013. And what does that do? That takes you very near the 1.2633 200-period moving average. That's been a fantastic springboard for every other move. That doesn't mean to say you can't go a little bit lower, but 1.87 to 1.20 has been the rising trend line. Let me draw it in here. I wonder if we're even going to get there. That's going to be so interesting. Yeah, there it is. So this is between 1.26 and 1.24 is a major euro dollar currency target on the downside. Upside 1.32 is very strong resistance. I'll be right back. Basil Chapman, Tiger Technicians Hour. Be right back. Dow's down 6. S&P's almost unchanged.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
At the EUR-USD, we're looking at this decline. It's gone to a trough D, the second down mode. Trough D, if there's no new low bar today, and it doesn't look like there should be, you never know. Today's young, but if it doesn't take at 1.28586, then this is going to be at least a trough D. In the weekly chart, there's a left side, right side price time match that says the week of the 26th of September, somewhere towards the end of September, if the decline doesn't get halted, 1.27s would be the target, as at 1.29s right now. When you're looking at this chart, what happens when I put this chart on top? See, there's a difference. In the daily chart, although the price, I showed this the other day, this is the gold contract continuous, and you're looking at 1242.70, the low of the 3rd of June, as being a left side, right side price time match, and that takes you to tomorrow, to the 11th. And it's trading in now at 12.48, so it's got 20 points to go before 26 points. I don't know if it'll do that, But I'm just saying, this is a technique that I like to use. It's called the Chapman wave inside wedge. It gives you a target line. But most importantly, in the gold contract, what I've been talking about for some time, I'm talking about some time, meaning over a year, is this pattern here. And I don't know whether or not it's going to continue this way, but that pattern that I call the H pattern, and my CD introducing the Chapman wave methodology, chapter 17, you'll see this pattern here. Oh, I didn't mean to do that. Sorry, chapter 17. This pattern that you look at where price plummets down, makes these little scallops, these little lowercase h's, test the left side, breaks it. Test the left side, breaks it. Test the left side, then it has a much larger arch pattern. And that pattern can very often turn into an M pattern. Doesn't that look very much like you just saw? This is a pattern. These are fractals that repeat over and over and over again. Well, in this particular fractal, what we're looking at is that the H pattern, which I drew in, I'm sure I drew it in somewhere around here, a year ago, in August of 2013. And I added this the other day, just because I've been talking about it, but I forgot to actually add it. I just added that second H pattern. This is the one that says, on the third time, two things better happen. One is if this is going to break to the upside, the stochastic and MACD have to turn to the upside and they have to break the previous peak of significance. The first one here is 129.21 on the GLD, the Spider Gold Trust, trading at 120.01 down 86. And then if it does that, turns out that the 200 period moving average, this yellow goldy line at 132.65, is close to the 133.69 high of the week of the 14th of March. So in order for the upside to really become active, it means that you've got to see a turn in the stochastic, which has to come from the daily, and then it has to get a powerful move that takes it over the 9-period moving average over 123.45. It's at 120.01 right now. And then there's a chance that you can go, and if it breaks out a move over these, this is really a base building move, because if it bulls to the upside, it says we're done with the 114s for now. We're going up to the 136, 140 area. If it fails, it says I'm still building the base. And if at some point I break 114, it means the base is now resistance and we've got to look for lower levels. So I'm not impressed. I think there could be a little bounce at any point because the dollar's a little overextended, but it's holding very well. And we're going to be watching this real closely. And what I said to my subscribers to my opening call this morning, excuse me, I said that I'm expecting some kind of a narrow close, as is a wait-and-see attitude for tonight's speech by the president. Not that we're going to learn anything much new. I mean, we know most of these things that come up in conference calls or in statements. So how the stochastic in the GLD either becomes absolutely a non-entity because it just flattens out and goes from 11% to 6%, as we saw when the positive indices were holding in the 95, 96 area on the upside. So this is not good. This is negative. Under 20% is negative. Over 80% is positive. That's exactly the opposite of what you read in the books. They call it overbought and oversold. I say nonsense. You want the price to be holding above 80% in the stochastic. If you're short, you want it to go down under 20% and then hold under 20%. So, excuse me. Cup of tea. There you are. So that says that the GDX, which is the gold miners ETF, is acting poorly right now. The 120-minute chart, there was some talk about it before, and I pulled it up and thought, gee, this looks like a single leg A up. Oh, I'm going to be talking about that in my webinar coming up Friday. These single legs to the upside that fail, the Eiffel Tower pattern, I call it, they can be potent. Anyway, now the GDX has used up strength, not a good sign. And we're going to be watching the dollar to see if the dollar index is doing the exact opposite. Look, the dollar index is making this cup formation. It went to a peak F. Let me just put this in here, F there. And then it goes to brand new. There we are. So it's gone to the second peak F and pull back, and now it's trying to rally. But I would say that for the GDX 8452, the high that was just made on the 9th, that's going to be really important in the 120-minute chart. If it breaks out and then holds above 8460, that's going to be very important. If it just pops up and then fails again, I'm talking about, sorry, the dollar. If the dollar does that, everything about this pattern right now says that the dollar is really close to some kind of a sideways consolidation, just slightly down. If you're looking at the stochastic, rallying nicely, the price isn't really performing as much as you would think, and the MACD has not yet turned up, and it has not yet crossed positive. In the histogram, the zero line here where it goes red under zero and green above is really the differential. It's the distance between that red line I call the fast-moving average and the green line, the red line, the slow-moving average, the green line, the fast-moving average. So if it does cross positive and the dollar is able to close in the 85.60s, that'll be very positive. But I got a feeling that it's this is just one of those cup formations, the drop bucket. Remember, why do I call it the drop bucket? Actually, it's just a double top. I better make it clear. That means that it's like the inverted lowercase h or a backwards y, lowercase y. And the reason is that there's like an X that goes to the up side, the handle, and then it's like the right arm of it's like the arm of a, what do you call those things? A backhoe. Backhoe goes down, picks up all the grit, lifts it up, and then drops it. And that's exactly what happens here. It's a double top formation. All right? So dollar itself. Now let's do a couple of other things. The QQQ. You remember yesterday while I was doing the show, I said the only index that has not made leg D is the QQQ out of all the major indices. They've all gone to at least a D. Some have gone even higher, but maybe even an F. But most of them have gone to at least a D. The Dow had gone to a D. S&P had gone to a peak D in the Chapman wave. So what happens? Apple comes out, AAPL, and what do? They see a sudden spike to the upside. It helps the QQQ series, but the dollar, but Apple had already made a peak D, the third peak D in this chart, and you can see in this chart, you don't have to look at the technicals or anything. You can just use two trend lines. I'm going to teach you on Friday. How do you use these trend lines? How do you just take a simple line and you place it somewhere, and it gives you all that information, and then another line at the bottom, and it gives you all that information. Because the moment that Apple broke down at 11:30 on the 3rd of September, that breakdown was very quick. It went from the 103 level, 103.20, down to 99.76, but eventually it went down to 90. 6.30 to the downside. Apple's had in a long time. And then there was that spike to the upside, and that created a pattern that I call the rogue wave. What is the rogue wave? It made a peak G in the 120-minute chart of the QQQ series. It made a spike to leg D above the previous recovery high of 100.34, and that is a pattern that, as I say, I call the rogue wave, and the rogue wave is, in fact, Chapter 11A, and I remember what slide was that? Chapter 11A. I'm just going to put it in here. So go Edit, Find, Chapter 11A. Here we go. Finding Surgery. There it is. An introduction to the rogue wave. I discuss this rogue wave, and basically what I say is there's a sign at the beach that says high tide at noon. At 12:08, you are sitting at the water's edge reading a book and relaxing when, splash! Suddenly you're soaked and wondering what happened. And as you're wiping your sunglasses so you can see, and you're looking around to say, well, what was that? The tide's going out. Well, the tide might have turned, but that one wave didn't read the sign. But the tide had in fact turned, and that's what happens. it's such a fascinating experience. Look, there it is, F to G. Very often happens F to G. Well, what did we get here? We got a peak F in the QQQ series. Remember, this CD was done 7 years or something year ago. Actually, the techniques were done way before that. The CD itself was done. Things don't change. Time doesn't change anything. Human nature is human nature. And what did you do? You saw a peak F pull back from the 100.34 level at 11:30 on the 3rd of June, pulls back, and then suddenly there's a spike up in Apple, helps the QQQs make that the next high, which turns out to be a G. And very often what happens is the bar that makes that new all-time high, it hangs around there just long enough for the shorts to say, oh, don't, a new high, I'm out of here, and they cover. All the folks that were in the stock on the long side who got really nervous and sold out when this rising wedge formation hit the almost the Fibonacci 300% extension, pulls back, said, "Oh man, I'm getting out. I've had it. We're already overbought. I'm out." And then it goes to the new high, and they say, "Oh, that was a mistake. I just knew I shouldn't have got out." And they get back in just long enough for the market to take the money and then close at the low of the day. And very often within 3 days, you're merrily on your way back down again, making lower lows. That's what we're going to see. Is that going to happen this time or not? But anyway, it's fascinating. That's the story of the rogue wave. So you've got the QQQ series. Now, this is going to be very important. Within the context of everything, we've got the VIX index. The VIX index has gone to leg C. I don't care about leg C's or D's or whatever it is. This has got nothing to do with the Chapman wave. The volatility index is a number. And until I see, let me just do this here. I'll do this for you live. It went to a peak D at 1341 from the low bar of 1124. So 11.24 was the low at trough E at 13:30, that's 1:30 in the afternoon on the 25th of August, 11:24. Starts to move up and goes A, B, C, D. That D suddenly sees a pretty sharp pullback, like an A to B equals C to D, not quite, but it has that lightning rod pattern. And then it starts a brand new buy signal to buy mode by going peak A, right there, because the low bar cannot be the high bar. I'll be explaining that whole process on Friday. Please check that front page out. What a time to do this particular course. Look, C, D. Now, is this a potential recycle? Is this that Chapman wave instant restart? E, I'm going to put /A just for the moment to start explaining certain things that are technically very important in my work. When you get to the second buy mode, to get an instant restart would be a very powerful move to the upside. But you don't know if that's going to happen until you see the stochastic holding way above 80%, preferably 85 to 87%, and then working its way slightly higher, maybe going to the 90% as there are higher highs and higher lows. So far, we've just crossed over. This is the first time, in fact, wow, this is the first time the VIX index has even broached the 80% level since, this is the red line, not the green line, since it broke out back in the 30th of July, when it was on its way to those highs in the 17 area. That was 17.57. All right. So now what we're looking at is there are very steady moves to the upside. What are the patterns you see? Well, I look at this and I say, I could make a case for a cup formation. It's really more like a bowl formation because it's taken its time, just very patiently moving up with higher highs and higher lows. But that stochastic's going to be so important because if the stochastic suddenly drops, because the VIX, the market rallies and the VIX goes from 1362 to 1320, that's not going to be good. I'll talk about it a little more when we get back. This is a very interesting time to be talking about the VIX. I'll be right back. Basil Chapman, Tiger Visions Hour. Dow's up 6, S&P's up at 0.83.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. So in this little final segment before we go to Larry Pesavento, and of course, wonderful show, I'm sure, as always with Larry, just a wealth of information. Wow, that chart that he showed us the other day. Let me see if I can find it here. I want to talk about it right now. Right there. And it is this chart right here. This chart is New York Stock Exchange investor credit and the market. But it doesn't, you see there's the spikes at the bottom, and then that makes the top August 2000, October 2007, and now we've gone through July 2014. So what you have to notice with this is that tops don't necessarily coincide specifically with the bottom. The bottom starts to already turn up. It's like there's an internal clock that's already set. And now it's done its job. It can move on. But the market doesn't get the message until maybe a month or two later. So we've got to watch this, where some kind of a top is. And it could be a pretty harsh pullback for sure. So this is the VIX index in the 10-minute chart. Look, it's gone from that obvious low bar right there to A, B, C, D, and then it goes to an E. D could have got out, but that's fine. It went to an E. Starts a brand new move and goes A, B, C, D, E, and now it's finding support. Well, you can take trend lines. Now, normally I would just grab this line and say, this looks very obvious to me. I'm taking this line. I'm drawing a straight line right like that. I'm going to just go click. I can do that at Trade Station, blink, and I've got myself another trend line at the bottom, but it broke underneath. So I'd say, okay, is there another way of looking at it? Well, I would take my arch formation like that, and I start saying, well, you know what? We've got some kind of an arch going on over here, so maybe this is the one to look at. Looking at it like that, get rid of this, and then saying remove, and now saying new, and now look what we've got. We've got the arch formation right there. So this is very clear that if the volatility index on the 10-minute chart starts to take its 1358, takes out 1346, that's going to say, hey, be careful. There's still room on the upside. Very, very short term. There's a 10-minute chart on the volatility index to say that buyers are there. If it pulls back, buying is coming in. If it runs up, selling is coming in. Think of it like bonds. When bonds go up, yields come down. Think of it the same way here. Let's get rid of this question. I had a couple of questions. I don't know if I'm be able to get to them all. I do want to get to something else, and that is that the 120-minute chart is going to give us all the clues. It is making higher highs and higher lows. If over the next 2 days, the VIX doesn't crack 1263, that's the 200-period moving average, but instead starts to trade and steadily trade in the 1440, is at 1359. Let's call it 1430 to 1465 or higher area. That says you got yourself a pullback starting to accelerate to the downside. So we've got a quick time for one quick question here. We've got Scott in Safety Harbor. Hi, Scott. How are you?
Well, you know I'm the Apple guy. I'm feeling good today. I had a sell order in at 103. I literally went outside to get the mail. When I came back in, it had already cashed out and gone back and was headed down.
So this is very interesting. You had that before the news came out, because when the news came out, it went to 103.08, but it had already gone to 103.74. So this was...
yeah, I had a pre-order sell-in, but as we talked about last week, I've been to Apple, and and to tell you the truth, Basil, the night before when no one wanted Apple, which I don't have any understand why no one on the street wanted it when it was 98, 35. The day before, I even increased my position to a total of 2,000 shares because it was just a no-brainer to me that when something's on the news, even local TV, that you're going to have some sort of a pop.
Yeah, no, you're
I think why
correct.
It came back after.
Scott, we're about to run out of time, but I want to first of all congratulate you. You've been trading this like a Stradivarius. Congratulations, and that move to the upside is very interesting because it gives a barrier. Well, maybe I'll talk about it tomorrow, but it gives a trading band. Yeah. So this is thank you for calling and congratulations. I had the same call from John.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.